Experts like Chamath Palihapitiya, Calacanis, David Sachs, and Brad Kasner have all commented on the market's free fall, which has yet to find a sustainable upward trend. And billionaire investor Chamath Palihapitiya has voiced alarm over rising inflation and the Federal Reserve's tightening monetary policy. He has predicted that the current economic condition will persist even after implementing the Fed's tightening measures. Chamath thinks we could have a mini rally, which would be fine. And if it is indeed brief, this upswing could be final one before a major economic recession. Hey there, I'm Jules, and welcome to Investing Wise Academy. In this video, let's talk about unimportant advice for investors where the next 27 days are critical and we must act now. One of the most well-known investors, Chamath Palihapitiya, has been warning of a severe economic downturn beginning towards the end of 2021 for a while now, and it's been reflected in the gloomy readings in the indecisive since 2022 began. The S&P 500 index has lost about 13%, the Nasdaq Composite Index has dropped almost 22%, and the Dow Jones Industrial Average will fall over 20% in 2022. David Sachs also expressed his apprehensions about the stock markets, which he sees as precarious and predicted will crash catastrophically in the near future. So, it is beneficial to hear what the professional in the field of finance have to say about the current state of stock markets. So let's hear from the experts. But before we do that, make sure to hit the like and subscribe buttons and let's do it.
We still had some amount of rate uncertainty from the Fed. I think people weren't sure how aggressively they were going to hike. But by early this week, it was pretty clear there's going to be two 50-point hikes, one in June and one in July, and then effectively a pause because then the Fed funds rate will be at around 2%. And everything from there will probably be path and data dependent. Okay, that's effectively what they said. Now, I think the markets had actually already started to see that writing on the wall. So if you go back to, one of our favorite measures, which is the 10-year break even, it's effectively rolled over, which means that from the highs in sort of late April, it started to come down, which says that, they were thinking that, the inflation was not going to be as bad in the back half of the year. And then the second is that corporate credit, which is really what matters in some ways to the Fed because that's where they can intervene. What is the spread above treasuries that a company can issue debt? When it goes crazy and it goes up, it means, oh no, the cost of capital is going up. That's going to be hard for companies to raise money. They may have to lay people off. They may need to get into cost-cutting mode, right? That's what goes through everybody's mind.
Chamath agrees that the conditions are favorable for a possible strong rally, but he doesn't know if this rise will last or if it will be a dead cat bounce or bear market rally in which market briefly recovers before plunging again. He also mentioned that crucial inflation statistics will soon be made public, causing much anxiety among investors. He claims that we're now at a brief halt and there's a possibility of anything happening. In addition, he predicted that inflation would be low and growth would be moderate if this data turned out to be quite solid, meaning prices were not rising as quickly as we had believed. That provides the Fed with ample justification for easing off the gas. David Sachs further explained that the rising cost of house loans substantially increases the cost of purchasing a property. Consequently, that will have a role in shaping a wide range of consumers' decisions, and the total cost may increase when something is paid for with a loan. He also noted that businesses are cutting back on expenditures and putting on the brakes, a trend that is especially evident in the startup industry. All the new companies are cutting costs, ultimately trickling up to the established ones. According to him, it looked like a severe economic slowdown or recession is on the horizon for the country. It's been months of his insisting the economy is in recession. The Fed is in a difficult position because many recession warning signs are flashing red at the moment, but inflation remains stubbornly high. Therefore, they definitely are in difficult position. Now, let's listen to what he says further about this.
I think what the Fed should have done is, in 2020 hindsight, is back last summer, we first got that shock CPI print. Remember, it was like 5.1%. Seemed to come out of the blue because for years and years we've been talking about inflation. Nobody thought inflation was a problem. All of a sudden we got that 5.1% print. They were in total denial about it. They just dismissed it, saying that inflation was transitory. And Yellen said the same thing. And so basically everyone just ignored the data for 6 months. And what they should have done was stop QE right then and there. They could have taken a little bit of time to think out, a rate increase strategy, but they were still basically engaging in QE for 9 months after that, first inflation warning. And if they had stopped QE there, then we wouldn't have had this asset bubble in the second half of last year. That's when it inflated the most, and we could have had more of a soft landing. Unfortunately, now they kept inflating, and really until the end of Q1, and they've yanked away the punch bowl so violently that I think the real economy is going to go into recession. So that's where we are right now. I mean, I don't know what the right answer is now, given that we're in this, almost stagflationary position.
Now, in response, Chamath stated that, in his opinion, we're currently in reasonable position. Now, the real question is, what you need to do to get market to go down. He said, this is a weaker point, but consider current state of affairs when consider cheap companies. Similar to how frequently we hear about Google and Facebook, the general public will view this as extremely low price. So, the price to earnings ratio is over the roof if you run a screen on it at 10, 11, or even 12 times. Additionally, he advised you to question whether or not your current profit is fair. Also, the market could fall if you believe profits are being wrongly projected. Take Snap, who has utterly messed up their lives. He has never encountered a corporation with a greater tendency of self-imitating on earnings calls. There have been 3 occasions in the previous 4 years where disastrous calls were made due to the bad scripting or lack of rehearsal on the part of Evan or those assisting him in preparation for such events. Now, Snapchat will do this regularly, perhaps once every 18 months, whereas Facebook has only done a few in its history. He said that the price dropped by 48% or something and spread to other IT businesses, causing them to lose 8% to 10% of their value. His point is that you had better hope the earnings were right if you think Facebook and Google are cheap at 10 times. This is because the reported earnings are incorrect. He believes that this risk is currently the biggest threat in the market, as it concerns the possibility that all of this slowdown truly contracts spend and the earnings are genuinely inaccurate. Expected profits will need to be lowered over the following 2 or 3 quarters, and that's presumably where we'll see the bottom. It's a great example if GDP slows and the Fed does what Brad suggested. Just make small adjustment to your course, earning a degree here and a degree there. So, what do you think? Share your thoughts in the comment section below. So guys, before you leave, if you want to support this channel more, please consider trying our super thanks, where your comments will be highlighted, and join our membership program to support this channel more. And please do note, we're trying to improve our quality of content, and your tips and recommendations to enhance it will be highly appreciated. And that's the end of this video. Thank you so much for watching. If you're new to this channel, make sure to subscribe and hit the notification bell button to get updated on our latest videos. Again, this is Jules, and don't forget to like this video, and see you next time.